Hello. Hello, everybody. Welcome to this week's Market Huddle. Can you see me now, Michelle? You cannot see us. We can see you. Awesome. Great. So this is the first Market Huddle we've been doing in our new office. For those of you that may not be aware, we moved offices a couple miles south of where we were. We're on Excelsior Boulevard and Highway 100 now. And well, you can see I'm still unpacking because my desk is undone here behind me. So anyways, welcome to this week's Market Huddle. We're going to be answering this week the 7 questions you have to know before you file for Social Security benefits. So who should be paying attention this week? Well, if you have not filed for Social Security, I think this is going to be, you're going to want to pay especially close attention to this week's Market Huddle, because what I'm going to share with you, these 7 areas, these 7 questions that you should be answering before you file for benefits are really important. Now, as normal, at the end of the huddle here today, if you have questions, whether you're a current client of ours or maybe you've received this from a current client of ours that thought you'd benefit from it, feel free to schedule some time. We want to make sure we're available. We want to go through these 7 questions with you. We got to make sure we get Social Security right. As I go through this, we'll get into a little bit more here, but I consider it the foundation of an income plan, and we have been paying money into this program for years, every single paycheck since that very first paper route, dishwashing job, whatever it was where you started getting a W-2, you've been paying into Social Security, and we want to make sure that we optimize it and get our money back. So the difference between having answers to these 7 questions can oftentimes be the difference between tens of thousands, if not hundreds of thousands of dollars of additional lifetime benefits. So we want to be a resource for you as you have as you answer these difficult or what can be somewhat difficult questions. So here we are, the 7 questions. I'm going to go ahead and start my presentation here. And I'll go ahead and get rid of the picture of Joe here so you can focus on the slides. Okay, so here's that disclaimer. We do this every week. Keep in mind as we go through these 7 questions, I'm not an accountant. I'm not a CPA. I'm not a we do some tax preparation in the office here, but I personally don't do that. We also are not attorneys. So if I say anything that sounds a little legalese or something, you'll want to make sure you understand that we may want to get a second opinion. Oh, and the other thing that they always want me to say that isn't written on the slide here, I am not a I do not work for the Social Security Administration. I don't work for the federal government. That's a good thing. That means that I can do retirement planning because the Social Security Administration is actually barred from being able to give you a lot of the planning that you may need to make the right decision around your Social Security benefits. So let's just roll right into it here. And as we go along here, feel free to go ahead and put a question into the chat box if you have a question. I'll probably come to them at the end. And we'll spend some time going through those too. So the number 1 question that you should be answering, and this is before you take your benefits, don't ask these questions after. To get the most out of Social Security, let's ask questions before. And the number 1 question you may want to ask is, what are other sources of income that are going to be available to me in retirement? If you have ever listened to us in the past, I oftentimes talk about this concept of what I call mailbox income. Mailbox income is money that hits the checkbook each and every month, regardless of what the investments are doing in your 401k. So good sources of mailbox income, obviously Social Security. 90% of all Americans are eligible for Social Security. Other sources of income in retirement may be your pensions, maybe rental income, maybe dividends and interest. There are lots of different sources out there, but the reason we're starting with this topic here is because some of these other sources of income can trigger other problems around Social Security. And it's a lot of times these things that people don't think about. So what ends up happening is they don't necessarily understand that everything around your income and in retirement planning is connected. You have income that can come in and start causing additional taxes around things like Medicare premiums and so on. So if you end up miscalculating how much income you have coming in, oftentimes the decision around Social Security can impact that. Here's the other thing that they tell us. Forbes magazine has told us that 96% of all Americans are going to make timing mistakes when they collect Social Security. It means that 4% are maybe going to get this right. So of those 96%, the average amount of money missed or not optimized around Social Security is $111,000. That's $111,000 that could be working harder for you in your retirement accounts throughout retirement. So we want to make sure we get this right. Here's another interesting number that I came across. Most of us are already aware under our own work history that we're allowed to start taking Social Security benefits as early as 62 off of our own work history. And that's exactly what 2/3, 66% of all recipients of Social Security started on their 62nd birthday. Okay. Another 20% of Americans start their Social Security benefits at their full retirement age. That's somewhere between the ages 66 and 67, depending on your birth year. If you were born 1954 or earlier, your full retirement age is 66. 1960 or later, your full retirement age is 67. Everybody in the middle there, they had 2 months for every year in between. So they tell us that 96% of us are making mistakes. And yet, if you add those two numbers together, the 67 and the 20, 87% of the time, families are taking their Social Security benefits either at 62 or they're taking them at their full retirement age. Again, 96% are making mistakes. 87 are falling within these two categories. What that tells me is it's very unlikely that the best time for you to take your benefits is either one of these dates, 62 or 66 or 67, your full retirement age. Here's the good news. At the end of today's Huddle, we're going to share with you how we can make sure we get the right decisions for you. We can put together a customized analysis. The way that you take your benefits is very likely should be different than your neighbor, even a sibling or something that has very similar circumstances. We want to make sure that we get this right for you. So everybody that's on today's Market Huddle is going to have an opportunity. Sit down with us. Let's take 15 minutes. Let's answer the 7 questions we're going to go through. And let's make sure that we optimize your Social Security benefits for your own specific situation. Number two is about your health. Social Security is a system where you got to be present to win. It means that basically if you wait too long and don't have longevity, well, then you left money on the table. On the other hand, if you start too early, you can be shorting your benefits for the rest of your life. So we want to make sure that we look at your health, and not just the health of you, the under your own Social Security benefits, but also let's make sure we're looking at the health of of a spouse if you're married. The larger Social Security benefit is the one that survives the passing of a first spouse. It's even more important when we start to see some differences in the amount of income or the amount of income received over your lifetime. So we want to, and we'll get into the spousal benefits here. That's another one of these. But just because maybe one of the spouses is in poor health doesn't necessarily mean you should be taking it as soon as you can. Now, who should take it as soon as they can? Well, if both husband and wife, if both couple or both, or if you're a single person and you're in poor health, it sometimes makes sense to do that. Also, in certain situations, we want to maybe take it if you have limited resources, if you need the income and there's no other way to generate it for you by taking Social Security benefits. It can sometimes be the lesser of two evils, running out of money too early, those kind of things. So again, we want to make sure that we're answering each of these 7 questions before we take your benefits. Number 1, what are sources of income? What other sources of income do you have? Pensions, rental income, what have you. Also, number 2, how healthy are you? The third one is taxes. Anybody that's ever worked with us for much time here knows that at Secured Retirement, taxes are kind of my jam. It's really what I get excited about, helping families and putting them in a situation where they can start to reduce this. I have held a long-term belief that investment strategies, the stocks, bonds, mutual funds that you're purchasing, it's only 1/3 of what we need to be looking at. You want to look at the investment decisions, but we also got to look at how to generate income in retirement, pretty much what this discussion is about, and also how taxes come into play. These are the 3 core areas that I think everybody needs to be looking at. According to Barron's, when it comes to taxes, retirees face multiple income tax traps. Lower and middle income retirees get hit more often with so-called torpedo taxes, as rising income causes their Social Security benefits to be taxed when it otherwise wouldn't. What do they mean by this? Well, a lot of us have probably been told that Social Security is up to 85% of the income is taxed. Let me step back. Everybody on the webinar here today should recognize that Social Security income by itself, it's the only income that you would need to maintain your lifestyle in retirement. Your Social Security is 100% tax-free. Yeah, there isn't a participant here today, single or married, that if the only income you needed in your retirement years was Social Security to maintain your lifetime, would you ever file another tax return? We can get into the math and I can show you why that is, but it has to do with the concept called provisional income. It's only when other types of income come into play, start hitting that tax return, do we start paying tax on our Social Security. Up to 85% of the Social Security income can be taxed. So that means things like dividends, interest, little part-time work in retirement, capital gains, required minimum distributions. These types of other events that come in and create income in our retirement on our 1040 every year, it's only when these start hitting the tax return do we start paying tax up to 85. Now, why did I say here that those that are in the lower or middle income get hit the hardest with tax torpedoes? Well, it's because if you're only being taxed on, say, 20% of your Social Security because you're in the middle of the bands, well, all of a sudden, every dollar that gets moved around, whether it's a Roth conversion, it's a distribution as a required distribution, it's an extra little dividend that you that somebody told you, or maybe it's municipal bond income, which, by the way, is tax-free, except when it comes to how much Social Security you pay tax on. All these little things start to sometimes create a situation where we get taxed once on the distribution, say from an IRA, but also we get taxed again on additional Social Security. So if you're in that middle band, you need to be aware of how Social Security benefits are going to be impacted in retirement. If you're above that band, there's other considerations we want to look at. We'll get into that in a second, but things like Medicare premiums. So how taxes are impacted by Social Security benefits, really critical. The real question we all have as we retire, should I be spending from my IRA money first, this money that has never been taxed, that'll be forced to be taxed sometime during your lifetime, or do I take my Social Security benefits early, knowing I might take more from the IRAs down the road? Well, we can start to show you how that works with what we call a look-forward tax analysis. It's part of what we do here, and if you are a current client, you've already probably been through this, but it's always a good idea, especially now we're getting into fall. As I say this, I'm looking out the window. There's little snowflakes going on already here, and it's not even Halloween. Now's a great time as we get to the end of this year. 2020 has been a crazy year for most of us. Let's make sure that we're looking at taxes. We've all got maybe a little extra time on our hands. Let's sit down this year and look at how taxes are going to be impacted, especially if you've had a life-changing event. Maybe you've recently retired. Maybe now both of you are on Social Security benefits, something like that. Let's make sure we get this right. And if you have not taken your Social Security, let's sit down and look at how taxes are going to be impacted. It's one of the 7 questions we need to be asking. These stealth taxes, these torpedo taxes, it's critical that we can avoid those in retirement. What is the 4th question, Joe? Good question. The 4th one is, how are your Social Security benefits going to impact your Medicare premiums? Well, we were promised when back in 1937, when they started Social Security, that they would never tax Social Security. And of course, we know now after our last question that they are taxing Social Security. I'm still surprised that a lot of us are not aware that Medicare premiums can go up based on what our income is in retirement. In fact, they didn't start to penalize us for having too much income when it came to Medicare until 2007. Then they made some changes again in 2011, and then they made some changes again in 2018, just 2 years ago. 2018, they added some extra bands. 2011, they started taxing the drug plans and such. So understand that where your income is, and I've got a slide here to show you this, where your income is depends on how much more Medicare premiums you pay. Let's just for now just focus on the married filing joint couple here in the middle. If you're under $174,000 of adjusted gross income, that's different than the taxable after you get your deduction. That's all income. 174, you get to pay the base amount of Medicare premiums, $144.60. You also don't have to pay any drug plan extra premiums. When we get above 175, 174 here, all of a sudden we start getting extra premium payments. You can see it starts at $57 a month, and those in the highest income threshold, $347. It means that your amount of premiums can actually triple. They can triple if you are not aware of how your income is going to be hitting your tax return. So one of the things we want to look at is where you're at. Now, who sometimes gets hurt the worst with this and they don't have to? Well, a lot of times we'll see somebody, let's say we had a Delta pilot, somebody that was making pretty good income during their working years, they retire, and now all of a sudden they go down to Social Security Administration and say, I need to start my Medicare benefits. Well, Social Security Administration is going to look at your income 2 tax years prior. So if it's 2020, they would look at your 2018 return that was filed when? The spring of this year, or spring of 2019, spring of last year. And they say, hey, you paid way too much money. Let's say that you're a Delta pilot, you're making over 200 but less than 270. They're going to tell you that you have to pay an extra $290 of monthly premiums. That's a huge penalty, 144 times 12. That's almost several $1,000s more of extra Medicare premiums because of this income you had, and now you're retired. You need to know if you find yourself in this situation, and that's one of the reasons we say let's answer these questions first. You need to know about a special Social Security form called an SSA 44. If you've ever heard a friend of yours, you're out there playing tennis and they're saying, I'm getting clobbered with my Medicare premiums and I'm retired, you got to make sure that they know about this form. It's an SSA 44. For whatever reason, the Social Security Administration doesn't like to share the information, and rarely do I hear other advisors sharing this with their clients. So anybody that's had a higher income, it can be for other reasons. It can be a loss of spouse. It could be a reduction in pay. It can be a loss of income generating revenue, something like rental property. There's a lot of reasons why all of a sudden you could have a larger event in 1 year. Again, these are 7 questions you need to ask before you start your Social Security benefits. Some of them you might want to ask even if you are collecting benefits. So number 4, how can your Social Security benefits be impacted by Medicare premiums? Number 5, how do you get the most out of your spousal benefits? Well, new rules that were passed here in 2016 have made a lot of the spousal coordination that we used to be able to do with clients. We used to have what we called restricted application or a file and suspend application. Some of you have heard us talk about this in the past. Now, most couples that had two income earners are no longer going to be able to qualify for the spousal benefits, but the situations sometimes come into play, again, where there's a big disparity of lifetime earnings between the spouses. Maybe one stayed at home with the kids a little bit longer, one had more part-time work, or just maybe one was a physician and the other one just kind of did some volunteer work. Whatever the reason, if the spouse's benefits are going to be less than half of the other spouse's benefits prior to full retirement age or at full retirement age, there might be some spousal benefits, and you'll want to know how those work. We can use this two ways. If we have one spouse that is not going to file right away, but the lower earning spouse still has benefits available to them, they had 10 years worth of work history, it's just not going to be up to half. A lot of times we'll tell them to take their benefits right away. Why? When the other spouse, the higher earner, files, they'll actually get a pay raise. Other times we may want to tell the higher earner spouse to hold off a little bit, let the other spouse file first so that they don't have to take the pay raise, and then we'll come back around. So there's different tricks we can kind of still use, even though they've told us since 2016 that spousal planning is dead. It's not the case. So if you've got a situation where there's a higher earner and a lower earner, lifetime earner, let's make sure we answer this question. These are all 7 really good questions you want to make sure you're answering. And, you know, the thing is, according to CNBC, deciding when you take Social Security could be one of the most important financial decisions of your lifetime. And that's why we're telling you that you need to make sure you answer all 7 of these questions. Let us help you here. Let us create some value at Secured Retirement. Let's make sure we get this stuff right. Also, another situation where we run into where a spousal benefits can take and really make a big difference is when there might be a younger child. Sometimes children under 16, we can get a spousal benefit that others aren't aware of. And by missing out on this, it's like walking over $1,000 a month as you're walking out the door. Most of us would stop over, pick up the $1,000. If that's the case, you got to know about the $1,000 and know it's there. So let us make sure we go through these 7 questions and we can help you with those. Additional benefits. This is maybe the most frustrating area where I see things. You know, somebody will come in my office, kind of like that SSA 44 form. They've been paying higher Medicare premiums. I get to tell them about this form. They get to go back to the Social Security Administration. Sometimes they'll make it retroactive and give them a refund for extra premiums they paid that they didn't need to. All too often, it's too late. You kind of snooze, you lose. So you got to make sure you're asking these questions beforehand. But a lot of times we see a situation where families just aren't aware of all the entitlements that they're eligible for. In fact, the Social Security Administration's own audit tells us this. And this was an audit done by the Inspector General, the U.S. Inspector General. The audit found that of 100 retirement beneficiaries sampled, 69 were eligible for survivor benefits, or sometimes referred to as widow's benefits, yet only 20 of the 69 had ever even applied for these benefits. It's a good example where there might be benefits that you're unaware of. You know, Social Security planning is really not a part-time job. It's something that you need to make sure that you really get somebody that's got the ins and outs. Many of you know I've written a book on this. It's something that we've really focused on for much of the last 26 years that I've been doing retirement planning. So it's a good place for us, but if I don't know the answer, I'll make sure we get you the right answer. Again, in just a few minutes here, if you've got questions on your own Social Security, even if we've gone through this before, let's sit down, let's go through 15 minutes, let's make sure we get it right. If we need to spend more of the time than 15 minutes, we can always make sure we do that as well. Last but not least, and I got a couple other housekeeping items after this. When should you file for Social Security to get the biggest net income? Take 5 minutes and just Google Social Security calculator. There's 50 of them out there. They're all free. The problem is that all those 50 calculators out there, rarely are they looking at the tax consequences. Rarely are they looking at all 6 of the other questions we want to look at. Are you eligible for other benefits? Is there spousal benefits? What's the tax impact? What are the sources of income? There's all these different questions. And what ends up happening is that calculator will show you the maximum way to collect benefits, but it may not be optimal. What I mean by that is all too often we see somebody that we all know that if we both wait till 70, that's the most we can get from Social Security. And when I have a couple in my office that are both about the same age, that's what somebody's told them to do. Or they went in line and they did a calculator. A lot of times what I can show you, though, is one of you takes the benefit a little bit earlier and starts to collect the additional 3 or 7 years that you're collecting benefits on that lower earner. We're going to actually sacrifice one of the pay checks to get the most out of the other. Why? Because I want to make sure we have the most survivorship income, other things, and pay the least amount of tax. All of these are really important questions. To really get down to this, you want to make sure you really kind of get a good idea on how to do that. Again, it's not just what's the biggest check, it's how much you get to keep after the taxes. And we want to make sure that we are looking at how to spread the payments a little bit, making sure that you don't end up just taking it both right away. Don't wait till both at 70 and then leave money on the table because you could have been collecting and getting about the same time of benefit. Getting a little bit more complex, there's this concept of having present money versus future value money. If I'm going to give you $1,000 in a year, it's not worth as much as $1,000 a day. Well, that's really all Social Security benefits are. It's a series of $1,000 paychecks that you're going to get, or several $1,000s. And what's the value of that discounted to today's dollars? We want to put that in there. We want to look at the taxes, look at all 7 of these areas of questions, and get this right. So we oftentimes hear about this concept of maximizing. But I think that term is a little bit misleading. What you really want to be doing is optimizing your Social Security. That means that you consider how your benefits are going to impact by taxes, Medicare premiums, other benefits, and so much more, and you get the most net. So we got a special offer. We're going to make sure that everybody gets to review their Social Security analysis and schedule 15 minutes with us. A couple of housekeeping items. I said earlier that right at the beginning of today's huddle, we had our very first clients in the office. Dick and Karen Arnold were in the office last Friday. We had barely moved in to ask them. There were boxes everywhere. Good picture of our office. They came in and visited with Dylan. So they were a little upset that we didn't tell them first. They said that they might have dressed a little bit more, so they asked us not to put a picture of them on the thing. But I thought they looked great. And anyway, so here's Dick and Karen Arnold, our very first clients in our new office, and of course Dylan was the one that visited with them there. Also, we are changing our logo. Couple things. We're dropping the word financial because I think most people call us secured retirement and the financial gets dropped anyways. Most of you know we've had this shield with the Ford Elite. We're dropping it, and the reason why is because after spending some time, we're doing some updating of our website. My core areas, I oftentimes say this, people hire us because number one, they want to make sure that they get their lifetime of income. They don't want to have to sacrifice. They don't want to see what they've had blow up. Number two, they like to pay the least amount of taxes. And if we can, the third thing that they want is to grow their wealth without the compromise of the first two. The tree there, you can see it represents growth, it represents foundation, and it represents those 3 areas that we focus on. So anyways, that's the new logo. Let us know what you think of it. You can, throw something in the chat or shoot us an email or whatever. You love it, you hate it. I think it's the one we're going to stick with either way, but that's, I hope everybody loves it. So with that said, I'm going to throw this offer out there if I can get it here. And if you want to schedule your 15 minutes, please go ahead and register for that right now. I've got a couple questions if anybody has any questions. I'm not seeing anything pop up. So hopefully the presentation continued here and such. So anyways, little snow going on here today. We're going to wrap it up here for today. I hope you got some value out of the 7 questions. Again, if you're a client or not, do not hesitate to schedule some time. Let's go through, spend 15 to 30 minutes making sure we answer all 7 of these questions before you take your Social Security benefits, and what have you. And if you see value in this this week's, then let us know. And you didn't say how much it is. What, the 15 minutes, Donnie? I think you're probably asking how much it is for the fit. It's complimentary. There's no cost because you're joining us here today. I'll underwrite 100% of it. So just give us a time that works for you, Donnie, and let's schedule 15 minutes to discuss about your own specific situation and make sure we get this right for you. Anyways, again, I see some snow coming down. I'm gonna hope everybody has a good rest of your week, and thanks again for joining us on this week's Market Huddle. The 7 questions you have to answer before you start Social Security. Have a good day.